This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, May 29th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, July corn down 2 3/4 at 4.53. July soybeans were up 3 3/4 at 11.98 1/4. And July Chicago wheat down 1 1/4 at 6.22 3/4. This morning we had an export sales announcement, 192,000 metric tons of soybeans to unknown destinations. The breakout was 60,000 for 25, with the balance 132,000 for 26. We also had weekly export sales released here, 7:30 this morning. Another solid week old crop corn, 1,015,300. On the old crop, new crop, upper end of the range as well, 618,600. On the soybean side, still pretty disappointing, really. Old crop, 299,900 and 137,700 for the new crop. Both were at the lower end of the range there. On the wheat side, it was kind of interesting. Big cancellations in the old crop of 807,300. Looks like they moved it all over to the new crop there, with 1,057,500 on the new crop side. So both of those were not in line with estimates. So I think that was a lot of rolling forward on the wheat side. For meal, 304,000 old crop, still continue to sell old crop meal, and 137,300 for the new crop, which was in line with the range of estimates. And we sold 3,400 old crop oil, which was as expected there. So good morning, guys. We've got end of the week here. Will President Trump agree to the 60-day extension of ceasefire and opening of negotiations on the nuclear weapon? Anybody's guess. He said he wanted a couple of days, so he's got a couple of days, and we'll see what happens, of course, over a weekend, which has been kind of on par for the way this thing has gone. And we've got sort of an interesting technical trade shaping up in corn and beans. Dustin, why don't we start there? It'll be interesting to see how we go home this afternoon and what that could lead to next week. So share a few thoughts, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, I think a lot of the question is like, some of the market participants that have been brought into our markets, getting long on, the war premium. I think you do need to kind of keep feeding the bulls. And as we start to roll over here below some of these trendline supports, that's the question. Like, will some of this very long managed money funds, for example, very long, will we start to see them pull back out of that position a little bit? Those reports come every Friday afternoon. We'll see what, I'm actually not quite sure today if they're delayed because of the holiday week, but generally it's every Friday afternoon that we'll see where they're at as of Tuesday. So it's always a bit in the rears. So just beyond that, though, I just want to point out a few observations. And one is, Gavin, you want to bring up the chart? This is the chart of July corn versus December corn as a spread. And so, the lower this chart goes, the more of a carry is being built in. And what this is showing is there's a 27-cent carry July corn to December corn. And that's really, a reflection of the idea that we're going to have a decent sized carry out, which we've known that a plus 2 billion bushel carry out projection has been likely in the works for a while, especially, look at that big drop there at the start of 2026. That was the January report confirming the crop size. And it's just been a slow motion bleed out of the old versus new premiums since then. Meanwhile, we've got record export demand, right? These are river downbound contracts, the way that these are set up. So to see 27 under is actually a pretty good number for a carry given that demand. and it's just a reflection that we are projecting to have a pretty sizable carryout, I think. Typically, I would look for like a 60% of full carry, which, in a 2 billion bushel market, that would be like 30 under July to Dec. So I think we're getting to that point where you're starting to adequately price that old crop premium to new crop. Where we go from here, anyone's guess, but just want to point that out. The other chart I was going to put in there, let me add it real quick, Gavin, is just the premiums that we're going to get into new crop beans over corn. So if you can pull that one up as well. This is a chart of Nov 26 beans versus Dec 26 corn. And I think this is surprising a lot of people. I would say us included to a degree. There was an article out in the AgWeb this morning talking about rising cost structures and people switching over to bean acres. We heard a lot of that. We didn't see that in the March 31st acreage survey, though. And since then, beans have only gained their premium over corn. So, we're off and running. There's no acreage switching happening at this point because of price action. So the ratio can go do whatever it wants to do at this point. But this is showing that it takes 2.49 bushels of corn to buy 1 bushel of soybean. And that comes down from that gray line's the 200-day moving average, 2.37. That hits the nail on the head of the long-term average of the bean corn ratio going into planting season. So starting to actually get an elevated price here. And, 25 million metric tons, that's all we're really, we know from that China's expected to buy from the U.S. on an annual basis. They really haven't gotten, we came into this year with very little on the books. They dribbled into that 12 million metric tons of old crop post that October agreement. They're very slow to play that agreement from last year. And, we need to start seeing some evidence that they're going to buy. The market is starting to take that at face value. You're still near $12 beans. And I just think this is interesting when you have crush margins near $3 for December crush. That beans are kind of showing a good sign right now. Now, is this going to run away or is this going to stall out here? The fact that it's kind of above previous highs and rising is just something to watch, I think, because there has been a lot of people short beans coming into this time frame. And if all of a sudden you do start getting the confirmation of Chinese buying, or there's some other catalyst that gets things going, beans could get interesting here just because they're making a good move right now.
Thoughts on that, Justin, as we wrap up the week?
Yeah, I think two things to add to that. You look at, Dustin showed July-Dec corn spreads, and we kind of talked about, if there's bullishness, it's most likely out forward. And I think the spreads, the price action, flat prices all, I think, made sense generally. You've got burdensome old crop supplies. Speaking of which, November beans have gone from an 80-cent inverse to even money with November, right? So it's being led by the November, I think, as part of just unwinding a big inverse that we've had. So I think, you look at the soybean complex, for example, every contract, once it got into deliveries, went to a big carry. And then they keep trying to keep inverses out forward. And then we get there and we have enough supply. I think part of it is just the fact that crush margins, board crush is so high, keeps an underlying bid to beans. And when you have those kind of crush margins, it's hard for people to get bearish beans when you can make, almost $3 a bushel on every bean that you crush.
Crazy. Right.
So that's kind of all these things are kind of at odds with each other, and it makes it really tricky, right? It's hard to be bearish beans at the same time you have plenty of beans and you're crushing max beans. So if they meaning China doesn't come in and buy a significant amount for export, you're still going to have a burdensome supply of soybeans, which I think the spreads are showing. Even though you have such good crush margins, we are already crushing the most we can. So I think things make a lot of sense to me right here. When you talk about where the fund position is, where the longs are, it's in the Julys, right? So the Julys are actually making worse trades than the new crops. right? So if you look at July corn, for example, it's below all the moving averages. It's got a big double top formation. A lot of things that just look like, the highs are in. And that's that's where most of the open interest and most of the fund long is. So I think as that liquidates, it would make sense to me that the spreads continue to widen. And then going forward, it's going to be, what does the weather look like? And does new crops find a bid? So I think if you just kind of look at it, you compartmentalize it, like, obviously December corn is going to have to go down with July, right? It can only get so wide. So it's doing its job. It's widening and widening and widening. I think you have to wait for, personally, July. You got to get through the old crop. You got to get July corn off the board before D's corn can be any good, in my opinion. So I think we're going to go through that. And we talked about this, you're going to have basis only contracts, all the stuff that, the bad behavior that always happens with a really big crop. I think you're going to keep fighting that until you get into either a weather problem where it doesn't matter anymore. Those kind of things. So
we got about a month there on that deal.
I think it's helpful to look at that July no spread that you mentioned, Justin. I just pulled it up, Gavin. If you pull this up, and if you look at that spike in November, that really came from the October deal that was negotiated, between Trump and the administration and China for the 12 million metric tons and the 25 million metric tons, respectively, old and new crop. So that was a big spike in the July no soybean spread, because we finally had, some Chinese business for old crop, even though we had zero coming into this. Crush margins were already on the rise. But then, China slow played it. So by the time we got to late December, China had barely dribbled into what they were going to, and it looked like that was it, right? So there's still a lot of disappointment just on like there's a lot of negativity surrounding it. And then, we get in Feb and Trump announces that we have, another outfall in Xi and another 8 million metric tons of old crop beans. So look at that spike in Feb. It really led right into the start of the war. And that's where we got to the 80 over that you're talking about. But none of that materialized. Not a single bit of that materialized. So we didn't get any more than 12 million metric tons, not a single bushel. So that's why we're back down to where we're at. And, 300 million bushel plus carry out makes sense that we're going to have an excess in the end for this year. But it does beg the question, just to put the devil's advocate on some of the enthusiasm we're getting in bean prices right now, is like, okay, well, we had an announcement for 8 million metric tons back then. Now we have an announcement that we're just continuing with the 25 million metric tons. I think the market will eventually get to the point, if China has not bought much going into, let's say, July and August, there's going to start to be questions about whether or not they're really going to follow through with this full 25 million metric tons.
Yeah, I mean, the problem is you're also, South America's got another record crop.
Yeah.
So it's like, I personally believe that spread should be 30 under. Maybe it gets there, maybe it doesn't. I mean, the speculative traders love to buy that spread. Go look on Twitter. It's like, oh man, going to be loading up on this thing. It's like, what are you loading up on? We have a lot of beans. There's no reason for China to buy old crop U.S. beans. And I think the market's, saying that, right? If they're going to buy anything, it would be out forward. So at first you liquidate the spreads. Typically you liquidate the spreads, you get to a carry. Now you're this big long that has to pay a carry to stay long and hope that China buys. That becomes expensive, right? When you have an inverse, it pays you to be long, right? They love being long in inverses because you sell the July out and then you buy the August for a discount. And then you sell the August out, you buy the Sep for a discount, right? So it pays you to keep along. The second you start building in carries, take example, corn and wheat, it's a very expensive long. So your patience wears thin, as you have to roll, like you just showed, July-Dec, you're paying 27 cents, right? So you have to sell your July long out and then buy December corn 27 cents higher, and then sit on that. And then you get to March and then you have to do it again and again. So that's why, being long commodities is, as a passive long, is very expensive. Why these index funds, if you look at any ETF, right? It just really struggles unless you get, the right timing and you get a spike, a flat price spike. Being long ETFs is just, it's expensive in commodities. So as these things get to carries, I think that kind of starts to, exacerbate that question that Dustin was answering of, hey, I'm long this thing. Now it's costing me money and the stock markets are ripping. Do I want to still be long soybeans or corn, when these other stock markets are going up? So I think that is a big risk in the short run, is if there's no excitement, if there's nothing to keep feeding the bull, the money likes to move to where there's action. So that's my take.
Very good. We got a couple minutes here, Ryland. Let's move to livestock real quick. Pretty quiet overall. No real cash action there in the cattle markets, and we got a couple day winning streak for the hogs. We did open lower here this morning, but I guess share a few thoughts as we wrap up the week.
Yeah, definitely a quiet day. I mean, I think all eyes are still on cash at this point. Did see a little bit trickle out, 256 and 405. So definitely going to be on the lower side, which I think is a bit of a surprise. I think the market was really hoping for something steady, especially with the discount here. And it still feels like we're just going to be chopping around at these levels, and just waiting for cash to kind of come down. Looks like the Packers got inventory right now. They bought pretty far out over the past few weeks. So it just feels like, there's no sense of urgency right now. So definitely a little bit on the quiet side. So we'll see how it actually shapes up. But I think that 256, 405 kind of levels are probably what we're likely to see here. And overall, definitely some macro concerns. I mean, I know the inflation trade, is being talked about, especially making the news, with 3.8% overall inflation, definitely above where we need to be at. And the cattle market definitely gets concerned. I think at this point, when we talk about consumer health, just because retail prices are record highs right now for beef. So I think that this is something that, can kind of move day to day. But overall, I mean, you look at the board and we are still at just, we're just off of record highs here. So there's still a lot of reason, I think, to be on the defensive, if you're a producer and just have forward margins in mind. Obviously, you get into the back end of the market, predicting, a $20 plus decrease in cash right now. But so far what we've seen is that ended up getting pulled up when we actually get there. So, things can change pretty quickly here. And I think the market really just kind of glossed over the cattle on feed report. But at this point, I think that's something just to keep in the back of everybody's head, is that, we've already kind of come to this point, what risk is still on the board as we look forward. And I think that's a really important question, just hard to answer, right now. So once again, the near-term factor is still going to be focused on cash. And yeah, hogs, just kind of quiet, mixed day there as well. Obviously, belly market has just been a complete slug here. It just dragging kind of carcass down with it. You had cash down $1, you had bellies down 99, and frankly, it just seems like that demand is not there whatsoever. So I mean, I think everybody's starting to look at it and ask why. This is some of the cheaper protein we're seeing right now, and it just doesn't seem to be a really good amount of demand right now in one of the cuts that would typically hold us up at this time of year. So definitely disappointing. I wouldn't be surprised to see the market just kind of fizzle out here towards the end of the week here. But we are still discount to all major moving averages and just need to see some good consistency in demand. We're just not seeing it right now. So just waiting for that to show up.
Very good. Appreciate the update there. We made it, fellas. Brian, why don't you drop a little fun fact Friday on us here as we go into the weekend?
All right, thanks, guys. Happy Friday, everybody. I hope you guys all remember the skit on SNL, Deep Thoughts by Jack Handy. All right, good.
Good start.
I thought I might be aging myself there, but with that reaction, I think we all remember. So we'll show some of the best deep thoughts that I came across. Dad always thought laughter was the best medicine, which I guess is why several of us died of tuberculosis. It takes a big man to cry, but a much bigger man to laugh at that man. If a child asks you where rain comes from, tell him God is crying. If he asks you why God is crying, tell him it's probably something that you did. Maybe the reason aliens never visit us is because they saw that we still clap when planes land. I like to imagine doctors saying, before doing something unbelievably terrible. If we're not supposed to eat after midnight, why is there a light in the fridge?
Oh, I always wondered that.
Every do not touch sign exists because somebody absolutely touched it. If a turtle doesn't have a shell, is it homeless or naked?
Question. That is a good question.
And lastly, the S in lisp is cruel.
It is cruel.
Wow.
Deep thoughts there.
Happy Friday, everybody. Have a great weekend.
Oh man, everybody's just looking at their phone right now. What?
I'm still trying to figure out the tuberculosis one.
Oh yeah. Very good, Bri. Appreciate that, buddy. Just came into the opening. Let's get a quick readout. July corn down 4 1/4 here, 451.5. July soybeans are up 3/4 at 11.95 1/4 is the last there. And Chicago wheat for July down 2 at 622. Link in the description. Check out the War Room Report. It's got premium content that we'll periodically put out, as well as just an overall deeper dive into everything we talk about daily here on the War Room. So check that out. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course supports our national scholarship competition. Fantastic foundation there. Check that out. If you got any questions, let us know. We can go through it with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend. We'll talk to you again on Monday.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.